Dow is down just 9 points after being down more than 650 points earlier this morning. We welcome in Eddy Gifford, wealth advisor, Tactive. Obviously, it's the tariffs that are whipsawing this market, and the experts are telling me expect more of that. Are you expecting more of that volatility with each tariff headline?
Yeah, I think just coming into this year in general, we were kind of gearing up for some extra volatility. We have other things in the market now that we didn't have a couple years ago. Bitcoin is a much bigger player that adds to volatility in the marketplace. And then we know, because we've been through a Trump administration before, that he tends to send out those tweets and different things, and it kind of has a tendency to move markets. But when we look at it from a tariff standpoint, I think that the tariff itself is the biggest negotiation tool that Trump is trying to use. And the issue is the unknown. We don't know how long it's going to last. We don't know what's going to happen. We don't know if there's going to be a compromise. But if we look back to the trade wars 2019, we saw a situation where we had a lot of sideways action while we were trying to figure out what was going to happen. And then when a compromise occurred, it was kind of like a slingshot to the market. So I think that with the tariffs and with them being out there, it's a great time to be accumulating. Take advantage of these down days at this point. Earnings are still looking really, really good. And as long as companies are able to still beat expectations, that's going to be good for the stock market. Now, that is not going to be without volatility. I think that this year is going to be a more volatile year. But if you're disciplined and you're using strategic rebalancing to your advantage, it could turn out to be a really good year. And I also think that this year is going to reward diversification more than concentration. So we'll see how it all pans out, but we're excited. It's been a good first month of the year so far.
Understood. So you're accumulating on the down days, so you are buying on the dips, and earnings are still looking good. That means you're a believer, at least in part, in this economy and these companies that will continue to be winners.
Yeah, I think that we're in a situation where the cream always rises to the top. So good companies react and adapt to different environments, and they're able to continuously be successful, and that pushes them to the top of the cap-weighted indices. So we've seen that happen, and we've seen the concentration really lead to a lot of ups, and I guess the concentration also causes more volatility. So if we are in a situation where finally all these other companies are gonna catch up, finally we're gonna see that breadth that we've been hoping for the last couple of years. Even if the tariffs spook those big companies like the Nvidias, like the Microsofts, like the Amazons, the rest can kind of make up for them. And you just got to be able to find the gems in the rest to help kind of counterbalance that portfolio, because you can't not own the Mag 7. They're still in a positive trend. It's still been running the market for us. It's just that we need to make sure that we're adding stuff around it that might be able to offset it or give it a little boost when things are good.
What's interesting is you have a way that you're doing this. You have a hold, a trade, and your hedge, a good way to handle this market. So tell us about the hold, the trade, and the hedge.
Yeah, it's something that I always go into any portfolio with, is thinking, okay, what is the stuff that we have conviction for? What is the stuff that's maybe an opportunity now? And what do I need to own just in case I'm wrong? Because I wish I had that crystal ball, but I just don't, and I just don't know. But I do know that history has a tendency to rhyme. So on the hold, we're looking at Atlassian. It's been a good hold for us so far. We've talked about it on previous shows, but at the end of the day, Atlassian team is the ticker, TEAM. They've been almost straight up this year so far. They just beat earnings by 20 cents last Friday, the stock was up over 20%, and even with the announcement of the tariffs, still ended up 15%. And I think the reasoning behind it is just because what they're doing is they're trying to provide more efficiency for businesses. And as people become spooked about the economy or about tariffs, about all these different things, they start trying to figure out ways to do more with less. And that's exactly what Atlassian does for businesses. And so it's not surprising that this is happening so far this year, especially with your previous guest talking about all the regenerative AI and how you can use AI for all these different things. And Atlassian is no different. They're using AI to help make businesses more efficient too. So we do like them this year for sure.
Right, and you have MicroStrategy as the trade and the hedge is TLT. A little bit about each quickly.
Yep, MicroStrategy, that's the Bitcoin play. Anytime that Bitcoin gets beat up, we typically see kind of a bounce on the other side, and that's where you could play something like MicroStrategy. It kind of works as a levered play to Bitcoin on the up and on the down. So be careful. It's not for the faint of heart when it comes to volatility. That's why we call it a trade. We can get in, we can get maybe a 10 or 20% profit and be out, and then go look for something else. And then TLT, that's just been interesting because the last 2 weekends we've had some spook or some scare in the markets, and for the last couple of years that really hasn't had an impact on the long bond, generally speaking, but the last few times it has. And so that gives me hope that the risk off trade is back, and in the event that things do go south or we do end up recession or something does break that we're not aware of, TLT can step in and provide some insulation to the portfolio in that situation. So that's where we would put it. We'd put it in a hedge position, and just know that the one thing that could unwind that hedge would be inflation. And if the inflation comes back, we'd be looking at a different hedge.
All right. Thank you so much, Eddy Gifford of Tactive. It's great to see you. Appreciate it. We're going to continue to talk about the tariffs in all different ways throughout this hour. But Eddy, thank you especially for the trade, the hedge, etc. So everybody needs to brace themselves, I think, for some volatility based on what the guests have been telling me.